Hello, this is the Tradesight Stocks and Futures Market Preview for Friday, May 3rd, 2013. Hope you've had a great trading week. As usual, our charts are powered by eSignal 11. Just gives us a lot of the power and flexibility that we need to do some of these key and core calculations that we would be nowhere without here in the markets. Here's a look at the NASDAQ Biotech Index. On the daily chart, we can see that we had a 13 sell signal about 8 days ago. It gives us this pink risk line up here. It's a strong index ever since early March. So it's a big energy move. 13 signals are pretty significant on those. Usually indicates a top or reversal. The pink line is sort of your farthest point you'd expect it to reach up to off of that signal before a rollover, and this red static trend line could come into play on a downside move should we roll over. Now, if we look at another key sector like the semiconductors, 8 bars up towards a setup phase as of Thursday, so tomorrow, Friday, could easily be the 9th of that one. And if we look at the NASDAQ 100, you're going to see the same thing, 8 bars up. And so obviously any close, if you know how the look-back mechanism works here, any close under about 28.66, which is actually 50 points lower, 45 points lower than we're at right now. Any close above that on Friday would give us bar 9. And that generally indicates sort of a short-term top. You can see back here in November we had a 9-bar move up, short-term pause in the market. Started our actual seeker count off of that. That got us the 13 sell signal that was in January on the one spike up day, sort of the high for a while. And we started heading up again, 9 bars up. That was a pause in the high for a while. So again, this 9 here would be significant. And then if we look at the S&P 500 daily chart, this is the uptrend that's been in place since November. We've been watching this for a while. It did dip under it a couple weeks ago, but got right back up. Then you got a 13 sell signal here on Monday. And so we've got a pink risk line off of that right here. The uptrend's in place. It's essentially a rising triangle wedge between this uptrend line and that pink risk line. If you break the risk line quickly, as we know, tend to get a push higher in the market, pretty strong push actually, as it negates the signal and takes a lot of the energy players off guard. If you don't break that, eventually you're going to break that uptrend line and really break it for real and retest and fail instead of the bounce back we got last time. So this is a real key area, probably maybe four days max before we'd have to make that decision. We've been in a pretty narrow range the last few days in general. If I show you the futures, the ES futures contracts on the ES, what you'll notice here is here's the week basically. So 1, 2, 3, 4 days. And we're essentially in about a 15-point range here the whole time. We did have a Fed meeting, so that slows things down. You can see we had the 13 sell signal at the close on Tuesday. That led to a turn down on the 10-minute chart, and we almost had a 13 again here on Thursday. The risk line from that first signal has been the top. That's pretty amazing right there. So again, if this just contains the market. Now Friday we've got unemployment data before the bell, along with the non-farm payroll data. We know that a lot of the economic data has seen a slowdown due to the sequester, and so if that infiltrates the economic or the data from the unemployment data that we're going to see tomorrow, that could be a negative to the market. Obviously, at some point in time, the market's going to start to view this as a real slowdown if it keeps seeing signs of it. So we'll be watching that data. It's a Friday. That could get us a little bit of shake around here early, but things probably lighten up after that. So we hope you've had a great trading week here in the Tradesight Lab. As usual, on Saturday or so, we'll have all of our previews up to get you situated for next week. Have a great trading weekend. We'll talk to you later.